The stock market had its reasons to decline today, and that is what it did at the open. After that, however, it was mostly an upward recovery for the major indexes, which ended close to their highs for this session. Retailer Target and railroad operator Union Pacific played a big part in driving the negative start. They both issued profit margin warnings, with the former blaming a need to clear excess inventory and the latter blaming cost inflation. Their news came on top of a surprise decision by the Reserve Bank of Australia to raise its key lending rates by 50 basis points to 0.85%, when only 25 basis points was expected. A report out of Germany showing weaker than expected factory orders for April, and news coverage highlighting national average gasoline prices hitting a record $4.92 per gallon in the U.S. Soon after the opening bell, the Dow, Nasdaq, and S&P 500 were down 0.8%, 1.4%, and 1.0% respectively. Just as quickly, though, they started to rebound, and the Cboe Volatility Index rolled over, and investors stepped in to buy on the initial weakness. Notably, the Cboe Volatility Index hit 26.24 shortly before 10 a.m. Eastern U.S. time. It trended lower the rest of the day, closing at 23.98 as the stock market's closing bell. The drop off in the so-called fear gauge coincided with a pickup in stocks, which were also helped by the following considerations: the S&P holding above the May 27 low, which was at 47.43 on its opening decline. Today's low was 40.80.19. A lack of follow-through selling pressure and target, which was down nearly 10% in pre-market trading, and in Union Pacific, which was down nearly 4.0%. The 10-year note yield slipping back below 3%, or 7 basis points to 2.97%. Broad-based buying interest that benefited all sectors. So today's best performing sector was the energy sector, up 3.1%, which is now up 65% for the year. It enjoyed a 1.2% gain in WTI crude futures to $119.6 per barrel of crude, and a big move for ExxonMobil, which was a 4.6% gain. Was upgraded by Evercore ISI to outperform from inline. For most of the day, the energy sector was the only sector to gain at least 1%, but late buying interest helped the course for a lot of sectors. The industrials gained 1.4%, healthcare 1.3%, information technology 1.2%, and real estate 1.2%. Sectors all ended up with gains in excess of 1%. Okay, so moving on straight away to Riot. Okay, Riot lost 3.14%. So at some point in this session, early in this session, the stock reached a new 52-week low of $5.83. This is beneath the previous low of $5.97 by 2.43%, and it was 87.41% below the 52-week high of $46.28. Shares of Riot Blockchain have plunged about 68% this year as Bitcoin prices lead. Bitcoin is the digital asset Riot Blockchain is associated with. It has the largest Bitcoin mining and hosting facility in North America through its subsidiary Whinstone U.S. Bitcoin is part of the decentralized finance, or DeFi, and we all know very well DeFi. We may or may not know that DeFi is built on three principles: decentralized architectures, decentralized trust, and decentralized governance, and they are all providing incompatibility with functionality as things stand right now. So it is not just the major issue with the decline we're seeing with Riot stock. You can see it's let's see this daily charts. You can see it's strongly bearish, seriously bearish. Amongst other things, is because of the broader systemic issues going on, and the sell-off in the price of Bitcoin, and the sell-off in Bitcoin itself. So these are the key reasons why Riot is declining. But at the same time as well, the much more remote issues like the criticism around DeFi and its incompatibility with its incompatibility, the incompatibility between its principles and the functionality of those principles. So Bitcoin itself has suffered, of course, of late as a result of the systemic adjustments going on, and that is also affecting Riot stock. Yes, we know the Fed is tightening and raising interest rates and all that stuff. So it's Bitcoin is supposed to be, market participants have tried to make it seem as if it is a hedge against inflation, but unfortunately it hasn't lived up to that. So those are the broader systemic issues. Okay, rebound target for Riot stock is $7.91. $7.191 will be somewhere slightly above all of its moving averages at the moment. Yeah, slightly above them, its 10 and 20-day moving averages. So given its 18.11% short interest, it wouldn't be out of place to expect Riot stock, Riot blockchain, to rebound to $7.91. So it's currently up 1.46% in this post-market session. So let's move on straight away to ExxonMobil. Okay, Exxon gained 4.58%, and it's down 0.16% in this post-market session. So according to the folks at Schaefer's Investment Research, ExxonMobil stock obviously rose on analyst bull notes. Stock is moving higher today. Last seen up 4.42% up to 4.42% to trade at, what's the current price? The current price is $103.2, its highest level since August 2014, after Evercore ISI upgraded the stock to outperform from inline. The analyst also raised its price target to $120 from $88, calling the move a valuation call, and saying the company's shares remain cheap despite surging in 2022 alongside crude markets around the globe. And additional analysts were weighing in on XOM stock as well, with Credit Suisse issuing a $13 price target hike to $115 and lifting its estimates for Exxon's 2022 operating earnings per share, citing rising natural gas prices and strength in refining earnings. Coming in today, the brokerage bunch was split on the equity, with 6 recommending a buy or better, while 8 rated it a hold or worse, which leaves plenty of room for additional bull notes to roll in. On the charts, XOM stock has held steady near roughly 8-year highs and sits nearly 65% higher year to date. This marks a healthy recovery for a late April bear gap spurred on by worries over China's renewed pandemic-related lockdown measures. Slightly longer term, XOM is on a 6-month winning streak. The security could also benefit from a shift in sentiment in the options pit, which lean bearish at the moment. Specifically, the stock Schaefer's put call ratio Schaefer's put call open interest ratio is 1.21. It sits higher than 99% of readings from the past year, pointing to a put bias amongst short-term options traders. Echoing this at the International Securities Exchange (Cboe) exchange and Nasdaq OMX PHLX, the equity sports a 50-day put call ratio that stands in the 98th percentile of its annual range. In other words, option traders are picking up puts at a quicker than unusual clip. That shift could already be taking place. So far, 69,000 calls and 59,000 puts have been exchanged. Or rather, when this piece was written, so that may be different now, which is double the intraday average. New positions have been opened at the two most popular contracts, which are the 10th of June weekly and 10th of June 102 and 100 strike calls. Okay, options look like a good route to go for those wanting to speculate on XOM's next move. The equities Schaefer's Volatility Index of 32% ranks in the 30th percentile of readings from the past 12 months. This means that short-term options are attractively priced right now from a volatility standpoint. What's more, XOM has usually outperformed volatility expectations based on its Schaefer's Volatility Scorecard ranking of 96 out of 100. So let's have a look at the options pit for XOM. Okay, 37.779 million shares crossed the tape, and we have the 10th of June. Yes, 10th of June, 100, and okay, let's get that. The most 102 and 100 strike calls. 102, okay, 101. Okay, yes, but things have since changed. Things have since moved on to the most popular, I think, is the 102. Yes, 102, and the next one is the 103, and then the 104. They saw the most volumes, but open interests also still lies on the 100 calls for 10th of June. Okay, let's get the top movers. You can see that 10th of June. Let's see. Okay, 105 calls saw a huge gain of okay, that's in terms of volume change. Let's get the price change. Okay, the biggest price change was $81 calls, gained around 182%. Okay, those are the calls didn't show up. Okay, so let's see what the technical opportunities are there for XOM. Support is at 61.61, resistance is at 99.78. It has since broken that resistance. When it comes back, that might also be a support. Okay, let's quickly have a look at MULN. Automotive lost 2.9%, up 0.75% in this post-market session. Okay, still concerning, the news is still concerning litigations and all that stuff. So 53.894 million shares crossed the tape. Okay, let's see, AERC, that's the next one. Clean Technologies gained 154.74%, down 9.5%. So expect there's a good chance they might retrace in the coming sessions. It's already down 9.5%. It was halted a couple of times. Yesterday there was some news concerning the company. That's the news that was says RIOT Clean Technologies said Monday the 6th of June the US FDA has granted clearance to the company's Pogo medical grade air hygiene technology, classifying it as a class 2 medical device. The device helps eliminate 99.99% of harmful airborne microorganisms, including the COVID-19 virus, according to the statement. So yes, it's still carrying on the momentum into this session. Later on in the session, still carried on the momentum. Is it optionable? Not optionable. AERC. Okay, let's return to the charts and see. Let's see the daily chart. Okay, so it started to rally yesterday, still rallying now above all of its moving averages, including its volume weighted average price. But see, it has a 52-week high of about $118.2, so still very much far away from previous highs. So next one is Jivo. Jivo dropped to its 52-week low yesterday, and today is gained 3.29%. Yesterday, yes, it announced it's raising $150 million registered direct offering priced out of the market under NASDAQ rules, and then I also said that it has entered a partnership with Google to track biofuel efficacy. So there was some devaluation given the offering and other stuff. It to raise that 150 million. That is what was behind that drop it had yesterday. 30% drop or thereabouts. Today 27.926 million shares have crossed the tape. It's optionable as well. And the $5 calls for the 17th of June gained 300%. So what was we had a target for a rebound target for GEVO. Let's find out what that target is again. Let's see whether we can find that target for GEVO. GEVO. I think the target we have is about 9.34 thereabouts. No, is it 9? I don't think it's 9.34. I don't think it's 9.34. Okay, in any case, let's move on to Amazon. Amazon dropped 1.43% after its stock split yesterday. Has dropped a further 0.44% in this post-market session. Okay, see any news? Okay, MKM Partners adjust Amazon.com's price target to $180. Maintains buy rating. Amazon's 20.1 stock split took effect yesterday. So you can see here, as they say, the Shaw law firm encourages investors in Amazon.com with losses of $1 million to contact the firm. Yes, it's some people's job, some people's business to do all these things. Hydrogen IPO finds a rare pocket of market optimism. Let's see what it's saying here. Okay, so that's all we have for the market roundup. See what you make see what you make of all of these things, and thank you all very much for watching this live stream.